Good afternoon, my fellow traders. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live analysis session. Today, we're going to be looking at massively the stock market, the US dollar. Bear with me, ladies and gentlemen. So let me start again. Yes, I'd like to welcome everybody to another live analysis session. We're going to be looking at gold massively. We're going to be looking at especially the reason why gold has seen a decline, if that means that we're going to see a continued retracement, if we're going to see a correction back upwards and the renewal of the trend that we have been seeing over the past few years. And we're also going to massively be looking at the NASDAQ, the S&P 500, global indices. We've seen a lot of volatility with indices. For example, if we look at the Nikkei 225, rose to above 50,000 for the very first time. The NASDAQ has overtaken the DAX as well, and also catching up to the Nikkei 225 as well. So we've seen a lot of volatility, ladies and gentlemen. So we need to look at what this volatility is, why we're seeing this volatility, what's driving it, and look at technical analysis and what technical analysis is indicating. What kind of trade setups can we potentially be looking at based on these indications from Bollinger Bands, from moving averages, from RSIs, and generally speaking, price action as well. So let's start off with the price of gold. Now, if we look at gold, we definitely can see that it has been struggling over the past 2 weeks. Now, the reason why it has been struggling, ladies and gentlemen, is because when we look at gold, it's of course massively inversely correlated with the US dollar. And it's also correlated with the sentiment of the market as well. There's both fundamental reasons for the price of gold and also technical reasons for the price of gold as well. Now, if we're going to look at the correlation in terms of with the US dollar, with the market sentiment, we can definitely see why gold is seeing a decline. Yes, throughout 2025, also 2024 as well, we've seen definitely the bulls controlling the market. That, of course, is without a doubt. However, if we look at the past 2 weeks, the US dollar has increased in value. So that instantly has a domino effect on the price and the demand of gold. We've seen similar movement as well within the bond market and also with certain safe haven currencies as well. Now, if we look at what is driving and what influences the price of gold, if we think about the fact that the US dollar is more expensive, if we look at the volatility that we have seen with gold, if we also look at the Federal Reserve, especially the meeting they had this week and the press conference, we can get a good understanding as to why gold has decreased in value. So if we take, for example, the Federal Reserve, everybody was of course expecting the Federal Reserve to cut interest rates by 0.25%. So that was already priced in within the market. Now, if we're going to look at data, for example, from the Chicago Exchange, they also advised that a December cut was priced in up to 95%. So that's almost 100% priced into the market. But the Federal Reserve was slightly more hawkish than previously expected. Yes, we did have 10 members of the Federal Open Market Committee vote for an interest rate cut. They did cut interest rates. Generally speaking, that had very little impact on the demand, very simply because we were already expecting that. It was 100% priced into the market. So that cannot have an effect. But what Jerome Powers, the head of the Federal Reserve, the chairman, advised is that many members of the Federal Open Market Committee are yet undecided on the December cut. And he very clearly confirmed that the December cut is not guaranteed, it's not written in stone. So, in other words, potentially it may not happen. Now, if we look at the Chicago Exchange, if we look at their FedWatch tool, the FedWatch tool was advising a 95% possibility of a cut in December. Now it's advising a 63% chance of an interest rate cut in December. So it's almost gone from 100% to 50-50. That, of course, is having a big domino effect on the price of gold. So you've got a more hawkish Federal Reserve. Yes, of course, most people still believe they are going to have to cut in December because of the weakening of the economy, the employment sector, especially as the US shutdown has lasted for so long as well. So there's a few reasons why gold has decreased in value. There's also the technical side as well. The technical side is very simply that is increased so much in value. And if we look at it on a weekly basis, ladies and gentlemen, it increased in value for almost 10 consecutive weeks, which is absolutely amazing. So, of course, there's definitely going to be, especially when there's slight concern over what's driving the price and a change in the monetary policy forward guidance, a lot of people are going to start cashing in on their profits. So definitely profit taking is having an effect on this retracement that has lasted now for 2 weeks. Now, when we're looking at the price of gold, and if you go to today's price movement, we definitely have seen that because it's declined, people have taken advantage of the decline, and we have seen a retracement upwards. Now, if we're looking at this retracement upwards, a lot of people may say, well, the retracement has formed. People are going to take advantage of that discounted price. It's already increased by 4% over the past 48 to 3 days. 48 hours all the way up to 3 days. A lot of people may think that it's definitely now going to correct it back upwards. But there's a few things we have to look at in terms of indications. If we're looking at indications, ladies and gentlemen, we are still below the 75 bar exponential moving average, which is a key trend line. We can see the trend line was on it here. The trend line was also on it here as well, as it has done here and here as well. If we're looking at a slightly, should we say, concrete indication, we can also use this indication here, this line here. Now that is also indicating that even though we're seeing upward price movement, a correction is not yet guaranteed. If we're looking at, ladies and gentlemen, the RSI is providing a slight positive indication. So it's not necessarily significantly high. We haven't increased above the 60 mark. We're still very close to the neutral level, but nonetheless, we are seeing convergence. We're not seeing divergence. We are seeing the price above 50. So we are getting a slight indication there. But if you're looking at price action is more or less, ladies and gentlemen, only forming a ascending triangle pattern. Now, if we're looking at an ascending triangle pattern, it indicates two things. It indicates that, yes, there is a bullish bias, which is, of course, a good indication for traders looking to speculate the upward price movement. But it's also confirming that we're not currently seeing an upward trend. So even though we're seeing higher lows, which is very important for upward price movement, we're not seeing higher highs. So we still need to be slightly cautious, ladies and gentlemen. And if we're looking at the overall downward impulse wave that we were experiencing, and a retracement, if we're going to follow most theories, is considered a retracement all the way up to 60%. So at the moment, we've had approximately 50% of the impulse wave downward being regained. So we're still in an area where it's still classed as a retracement. Even though we have seen quite a lot of upward volatility, it is still considered to be a retracement. Now, another thing for us to take into consideration, ladies and gentlemen, is if we go to the US dollar, the US dollar is the best performing currency of the day. Look at the US dollar index, ladies and gentlemen. The US dollar index has increased significantly since the meeting of the Federal Reserve. So it's been 48 hours now where the US dollar has significantly increased in value. Now, of course, gold and the US dollar have an inverse correlation. So that means when one increases in value, the other will potentially decline. Now, there is times where they move hand in hand, but what most economists and traders find is when they do move hand in hand, one of them will have to give way at some point because it has a significant impact on traders' psychology and the price which individuals are paying for the commodity as well. So the US dollar is performing extremely well. There is fundamental reasons why the US dollar is increasing in value as well. Whereas if we're looking at gold, yes, we're seeing upward price movement, but it's not as strong of a price movement. Now, I've got some questions, so very quickly, let me answer these questions. I've got a lady here who's asking at what point will gold see more concrete buy signals. Now, if we're going to look at more concrete buy signals, ladies and gentlemen, in terms of technical analysis, if we increase above this level here, that means we've increased above 60% of the previous impulse wave. So based on most price action theories, it's no longer in a range of a retracement. So there's a higher possibility of it correcting back upwards. If we also increase above there, that means we suddenly have higher highs as well as higher lows. And we also suddenly will be above both trend lines. So at that point, we will have the moving averages, both exponential and simple moving averages, indicating upward price movement. The volume weighted average price also will be trading. The price will be trading above the volume weighted average price, which is a key indication as well. We're above the oscillator, the RSI. We're seeing in terms of price action higher highs and higher lows. So at that point, we will start to see, based on technical analysis, gold's potential for upward price movements significantly increase and materialize. So those buy signals can materialize at that point. What we would like to see, of course, is that there's also other aspects of the market which supports that. A good aspect which would support it is if the US dollar's upward price movement loses momentum. Now, if we go onto a larger time frame, if I go here, if I may, to a larger time frame and slightly zoom out, you can also see the US dollar is at the highest price it has been in 3 months. Generally speaking, over the past 3 days, it's performed quite well. But what we can see is that it's also at a key resistance point. So if we're looking at the price range that we were seeing here, we're currently smack bang in the middle of that price range. So that's a very key level. And if we're looking at the point where the price has recently collapsed, looking at the past 3 to 6 months, we're either at the resistant level or above that level. So we're also at a point that potentially the trader psychology can change as we are at that resistant level. Of course, we need to continue to evaluate and determine if that is going to materialize. If that does materialize and we continue to see upward price movement with gold, then that would of course give us a real ideal setup based on technical analysis and fundamental analysis, which indicate upward price movements for gold. We can also look at other fundamental factors as well. So, for example, the VIX index is at the moment trading lower. It was trading lower yesterday as well. The VIX index is an index which is used to indicate the risk appetite of the market. So, if it's lower, it means that confidence and sentiment is improving in the market. Now, if that suddenly increases in value and the stock market becomes slightly weaker, the US dollar slightly becomes weaker as well, then all of this falls in line with gold as well. That can definitely support the price of gold increasing higher. Now, though, if we go to a smaller time frame, on the smaller time frames, we are mainly seeing upward price movement because it's more looking at short-term signals. Now we are trading above the 200 bar exponential moving average, simple moving average, which is key, definitely key for short-term traders. Now, because we're trading above that level, we can definitely very clearly see here higher lows. On occasions, we see higher highs, not on every single occasion though. We have currently retraced. People can look at that as a positive because it means they don't have to trade at the most recent high. They've got an opportunity here to purchase at the discounted price. Regardless of that retracement, we're still above our main moving average here. And the good thing is that it's found support at that moving average. So what can traders take into consideration in terms of if we're going to see an upward price movement. Here we've got 61% of the retracement being regained. Okay, so we can see the high here, we've got the low here. If we measure that and measure regaining momentum, at this black line is 61% of momentum being regained. Okay, so again, just out of the range where normally we see retracements. Now we're just under that level. Now, if we slightly increase this level, we can also look at the most recent breakout as well. Breakouts, of course, are also used as indications when looking at technical analysis. So that's at the moment an area where we can see in terms of price momentum, we have an indication. In terms of the 200 bar simple moving average, we also have an indication. And in addition to this, we also have an indication from the breakout as well. So there we can see a key level where we can see this materialize. And we also will be trading above, like you can see here, very significant highs as well. Now, in terms of the short term, where we're going to see sentiment suddenly switch in favor of downward price movement, especially again if the US dollar continues to increase in value, like we can see here, it's definitely continuing to increase in value. If you look at the currency market today, ladies and gentlemen, the best performing is the US dollar index. That's currently trading 0.20% higher. The second best performing is the Japanese yen, which is trading 0.10% higher. Both of these two currencies are safe haven currencies. So both of them can put pressure on gold prices. So we have to still, even though we're seeing that upward price movement, we don't yet have a buy signal, but we need to look at and prepare for the potential to suddenly see a pivot and us changing the bias of the day. I've got a question here. What's the worst performing currency of the week? Sorry, of the week, the gentleman says. The worst performing of the day is the New Zealand dollar and the euro. If we're looking at performance in terms of the week, the worst performing is the pound and the Swiss franc. The best performing on a weekly basis is still the US dollar. Second best is the Australian dollar, largely because of news that we had related to inflation earlier on this week. So hopefully that answers your question. I've also got a question in French. I apologize, but I cannot speak French. If you do have questions, though, feel free to get into contact with our support team. And there is, of course, always a French-speaking member that can assist you. So if we go back to gold and looking at if we're going to see upward momentum lose its strength, if we're going to see it suddenly decline, where are we going to see sell signals suddenly materialize? Now, if we drop to, for example, this level here, why is this level key? The reason why this level key in terms of the pivot is because suddenly we go below the volume, the moving average. And if you're going to look at as in terms of establishing itself below, it hasn't been below this level for just over 2 hours. Okay, so it's been a couple of hours because keep in mind we're looking at a short-term time frame. So this is only a 4-minute time frame. So 2 hours is quite a long time for this time frame. So if we drop below that level, we're dropping below the 200 bar simple moving average. We are also dropping below the previous low. So again, we're seeing dropping below the moving average and a breakout as well simultaneously. So that also assists us. Now, that's where we may potentially, it's not guaranteed, but potentially see indications of downward price movements. Now, we've got some individuals that may say, you know, I'm uncomfortable trading at this level, even though we're seeing technical analysis indicate downward price movement here. So what can I do in terms of if I'm that type of individual? If you are that type of individuals, there's a few aspects of the market that you can take into consideration. You can look at a technique which is known as pyramiding. You can also look at a technique which is known as scaling out as well. Now, if we've got an individual who would normally open a trade, for example, of 0.10 lots, but he's slightly cautious about this trade because we're looking at a change in the trend that we're seeing in terms of the day's trend. If we are looking at that, then what an individual could do is instead of opening 0.10%, he can open 0.5%. And then what he would do is if the price continues to move in his favor, so for example, if the price declines there and starts to decline further downwards and so on, if he does do this, okay, and the price continues to move in his favor, then what he can do is at multiple levels, he can open further but smaller trade sizes. So this is what is known as pyramiding. It's not scaling in. When you scale in, you're opening the same trade size. Now, the issue with scaling in is that you're significantly increasing your exposure to this price movement. You're fully exposed to this direction. And in addition to this, what you're actually doing is because on every single occasion you're opening the same trade size, you are lowering the average entry point. Whereas ideally, we want to sell as high as possible, but taking advantage of the downward price movement. Or if it's an upward trend, you want to buy as low as possible, taking advantage of the upward trend. So we don't want further additional trades to push that average purchase price or sell price uh, further in favor of the trend. So what you can do is open additional trades on each occasion, okay, but smaller trades. And that way, you're not significantly affecting your exposure and you're not lowering the average purchase price either. You will lower it, but not to the same extent, not to the same volatility as you would see. And what you're doing is you're basically saying to yourself that I'm going to trade on every single breakout. Additionally, what traders could do is set a certain amount, for example, 0.10%, and open additional trades on every 0.10%, like so. Okay. And then what they'll do is they set a certain target, for example, here at this support level, and exit all three of these trades at that level. Alternatively, what a trader could do is open, instead of one trade here at this area where we're seeing an indication from technical analysis, again, which is an indication, it's not guaranteed. What they can potentially take into consideration is instead of opening, again, for example, 0.15% lots, they can open three trades at the same price, 0.05% lots on each occasion. The first one could have a very early exit point with a small target. The second one can have a slightly larger target, slightly further away. And the third one can have an even larger target, again, slightly further away. So what we're doing is we're again looking to reduce the risk because we're looking at the change of trend in terms of the intraday trend. But again, the key thing when we're doing this, ladies and gentlemen, is that we're going to see the US dollar indicated also. At the moment, the US dollar is increasing in value. Even as we're speaking, it's continuing to increase in value. So it is something that, of course, we can potentially take into consideration. Now, I've got some questions, so I'm going to answer these questions. Somebody says here, there's a lot of volatility on the stock market. Guys, there's been a lot of news this week in regards to the stock market. If we're looking at the stock market, and I'll speak about this in a moment, we've got earnings seasons, quarterly earnings reports from major technology companies. Apple, Amazon, and Alphabet all beat their revenue and earnings expectation. Amazon, for example, saw the strongest growth in the cloud sector that they have seen for more than 3 years. So we saw some very important announcements. We also have had announced that Netflix will have a 10-to-1 classic stock split. A 1-to-10 classic stock split. They're also considering buying Warner Brothers Discovery. So there's a lot of news for us to take into consideration. So it's understandable that we're seeing that volatility. We're going to look at that in a moment. So that's one question. I've got three more questions. So somebody says, how high will it hit this trend upwards? Now, this question, ladies and gentlemen, is definitely something which is going to depend on your methodology as a trader as well. In terms of targets, of course, CFDs and characteristics of CFDs are designed for short to medium term trading. Okay, not keeping trades open for years and years and years. But of course, it depends on you and your methodology of trading. And the great thing about HFM is that we've got swap free trading accounts. So you can trade and keep trades open for a certain period of time without incurring swap fees. So yes, with here at HFM, we are extremely competitive and have great features for you. But in terms of your target, regardless of the fact of that, we're not going to charge overnight fees like the rest of the market tends to do. We still have to be very cautious in terms of where we're targeting in terms of our take profits. Now, in the short term, definitely here the 100 bar simple moving average on the 2 hour time frame is, in terms of technical analysis, an indication of where to aim for. Again, this is for the short to medium term. That's also definitely falling in line as well with the RSI as well. So if we're looking at the RSI, that will also go to the highest level that we have seen since the 21st of October. So that's a level that we of course can aim for. Now, if we look at longer term, so somebody looking to keep the trade open for a week, 2 weeks, 3 weeks, then of course a lot of traders are going to be looking at the all-time high, which is also the double top, which is all the way up here. That's very far away. So individuals are doing that. They may wish to scale in and scale out in order to reduce the risk. Or alternatively, what a lot of traders would do is they'll only aim for 75% of that. So instead of waiting for the price to go all the way up to this resistant point, which is 13%, they would actually aim for 75% of that, which is approximately, ladies and gentlemen, 0.60%, which is basically here. So alternatively, a lot of traders will aim for this level instead. That's again if we're looking to reduce the risk. But ladies and gentlemen, it depends, because in a period of 2 weeks, a lot can happen. So traders tend not to have a standard level that they're aiming for, which is going to take maybe a week, 2 weeks, 3 weeks, and 4 weeks to achieve without continuing to analyze the market. And as they continue to analyze the market, that take profit may change. I've got another question here. So somebody said, can you give us the value at each level? Yes, when we were looking at upward price movement, ladies and gentlemen, the level that we were looking at is 4,026.12. When we were looking at downward price movements, this is just for the short term, ladies and gentlemen, we were looking at 4,010.35. So those are the two levels. I'll put these actually write these levels down on our chats for you. So we have 4028 and we also have 4010. So I've got those levels here on our chat for everybody. Now, last question. Somebody says, is it giving us an indication of higher highs? Like I said, at the moment, we're seeing an ascending triangle pattern. So there's a slight bullish bias, but we're not yet getting that indication. So we're not getting yet a concrete indication for upward price movement. At the same time, the US dollar is increasing significantly in value, and it's the best performing currency of the day. In addition to this, based on the VIX, the market sentiment is improving. Based on that, ladies and gentlemen, that's also an indication for the price of gold to decline. We've been speaking about gold declining now for 30 minutes, ladies and gentlemen. In that 30 minutes that we have been considering the price of gold declining, it has already declined by 0.36%. But of course, this is something we need to continue to monitor. So somebody says, what can you say about gold from Monday uh, up to next week's NFP? What I will say is you have to be cautious about NFP because we're still within a US shutdown. So we don't know if that's going to be delayed, if it's going to be postponed, or exactly what's going to happen with NFP. In terms of what I say for upward price movement, you have to, of course, continue to look at these indications because these indications, of course, continue often. Now, when we're looking at the stock market, ladies and gentlemen, a key risk for the stock market, keep in mind, I would say that there is, ladies and gentlemen, a lot of positive earnings news which have come out this week. If we're looking at, for example, Alphabet, their B earnings expectations. If we're looking at Amazon, their earnings report was extremely positive, and so was Apple's as well. Now, the issue within the market, ladies and gentlemen, is that Alphabet was not able to maintain that growth. So at first they increased by 7%. It wasn't able to maintain that growth. Today, for example, Alphabet is slightly declining. Yesterday, it gave up approximately 70% of its profit. Um, Amazon, on the other hand, ladies and gentlemen, continues to perform extremely well. Amazon's up at the moment more than 10%. The reason why Amazon is up is because they significantly decreased expenditures on their account. And at the same time, cloud growth was at the highest that we have seen for quite a few years. The main issue for the NASDAQ at the moment also is creating an issue for the S&P 500. The main issue, ladies and gentlemen, is Meta. Meta confirmed in their earnings reports that, number one, it wasn't able to significantly beat earnings or revenue expectations. In addition to this, they confirmed that the penalties and the taxes that they had forced upon them, it hit profit. Okay, it had a big effect on its profit. At the same time, their expenses and investments into AI were significantly higher than previously expected. And the board actually came out and warned investors that in 2026 and 2027, it would continue to increase. This morning, Meta confirmed that they would actually issue $30 billion worth of bonds for investing into AI. So again, it's a lot for investors to digest. A lot for investors to digest. So that's the main issue for the NASDAQ. The main issue for the NASDAQ is Meta. Now, the Nasdaq has declined. Well, actually, we will start off with the 2-hour time frame. If we're looking at the 2-hour time frame, we're trading above both trend lines. That's a positive aspect of the market. We're seeing a lower low at the moment. And if we're looking at the RSI is exactly at 50. So we have a slight sell indication from the lower low and lower high. We've got a neutral indication from the RSI, but we have a buy indication from the 2 moving averages. So a lot of people are going to say to me, how can I get some more concrete indications in regards to this? Now, what we can also do is take into consideration component analysis as well. Now, what can we do in terms of component analysis? A lot of traders will look at the top 11 most influential stocks. Now, some people will say, why 11? Basically, it's the top 10 influential companies But Alphabet has two stocks, so it's the top 11 stocks. And a lot of traders will say, I'm not willing to buy the NASDAQ and speculate its upward price movement unless at least 65% of these stocks are increasing in value. So, how many stocks are increasing in value? We've got 1, 2, 3, 4, 5 increasing in value. 5 from 11. So that's, ladies and gentlemen, under 50%. So, are we comfortable to buy the NASDAQ and speculate its upward price movement when only 45% of the main influential stocks are increasing in value? At the same time, ladies and gentlemen, today gold is trading higher, the Japanese yen is trading higher, and the US dollar is trading higher. All safe haven assets as well. So there is factors there that saying we need to be cautious about speculating upward price movement for the Nasdaq potentially, but at the same time we don't have an indication of that of downward price movement at the moment. So we are at a very key neutral level. But if we switch over to this smaller time frame, here we're on the 4-hour time frame, we can definitely see that if we're going to increase above this trend line here, then the 200 bar simple moving average starts to give us an indication. That's quite far away. So what a lot of traders may consider doing is switching to a 3-hour time frame, so they get 3-minute time frame, so they get a slightly earlier indication there. So that's something traders may look to do. Another aspect that traders may look to do is look at the 61% momentum being regained. That's again more or less at the same level of the moving average here. So there's no need to add an additional trade there because it's at the currently the same level. So based on that, ladies and gentlemen, we can see that if we do regain momentum and increase to that level, especially if we see the VIX continue to decline. And in addition to this, we also see that some of these stocks starts to improve. So for example, if we look at these stocks, a lot of these stocks are seeing a slight decline, such as, for example, Apple has only seen a very slight decline. Broadcom's only seen a very slight decline. Same goes for Alphabet stocks as well. So if this suddenly changes and we get 70% of the components increase in value, then that's something we can take into consideration as well as a signal. Now, there is another theory in terms of component analysis as well, that instead of looking at the top 11 most influential stocks, they'll look at all stocks which have a 50% weight and above. So basically the top 30 stocks, how many of them are increasing in value? So let's count them. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. We have 18 stocks. So 18 stocks in terms of percentage, that's 60%. So again, even if we're looking at that theory, we don't yet have a concrete indication to speculate by price movements. But that's going to continue to change again and again now that the US session has opened. So that's something we're going to, of course, continue to monitor. Now, we can look at this area as a potential signal for upward price movement, potentially. But again, this is all based on the indication from technical analysis. So we have to keep in mind, an indication is just an indication. It's not a guarantee. Now, let's say, for example, it doesn't break above there. Okay, and we instead see a retracement. Now, as long as the retracement does not go to a lower price or to the previous low, and it remains a retracement. So, for example, let's say only declining up to here, then what we can do is actually lower that indication to here, in which case that's the breakout level. Again, we can look at to pyramiding, we can look to scaling in as well as an option also. So that's something we can take into consideration. If we've got individuals that are looking at a more longer term outlook, then what they can also do is take into consideration between these two levels here. So we've got the 75 bar EMA and 100 bar SMA. Between these two levels here, which is 25,809 and 25,608, between those two levels, traders may look at the averaging down method. So basically taking advantage of the discounted price. In addition to that, that's actually the price gap area as well. So that's a key level as well, because that's the first level where traders were able to complete the transaction. Because of course we've got a gap here between these two areas here. So that's something also traders can take into consideration. Now, let's look at currency pairs as well before we end today's session. Now, if we're going to look at currency pairs, of course, there's advantages to looking at the euro against the US dollar because it's one of the worst performing currencies against the best performing currency of the week. Same thing applies to the pound against the US dollar as well. We can see that here as well. Lots of downward price movement. Now here we're definitely seeing in terms of indications of downward price movements. But as Friday comes to an end and we get to next week, we need to be cautious that all of this is not going to correct and rebound. So we have to be cautious of that, ladies and gentlemen. In order to help to assist in terms of that as well, we definitely are going to continue to analyze the US dollar index as well, which is going to give us a fairer and stronger indication of the US dollars value and US dollars potential. Now, if we're going to look at the best performing worst against the worst performing currency, in order to try and avoid there being conflicting indications, or should we say, two currencies simultaneously trying to increase, then again the worst performing is the New Zealand dollar, the euro, the Swiss franc, and the pound. All those we can take into consideration. Now, if we want to try and avoid the correction, there being a correction, then what we can also take into consideration is the US dollar against the Swiss franc. The Swiss franc is the best performing currency of the year. Now, of course, this also depends on the day that we're checking it because the Swiss franc is battling with the euro as the best performing. But if we look at the Swiss franc on a larger time frame, we can see that the US dollar is extremely cheap against the Swiss franc. So there is still momentum that we can take into consideration. For example, all the way up to here and all the way up to here, rather than seeing a correction. Whereas if we're looking at the euro against the Swiss franc, the euro against the US dollar, or the US dollar against Japanese yen, is a very different price scenario. So, ladies and gentlemen, that brings us to the end of today's session. Do we have any questions before we end today's session? Don't forget, ladies and gentlemen, that here at HFM, I'll share just a new page, bear with me. Don't forget, ladies and gentlemen, here at HFM, we have our new online trading courses, which you can get access to here. There's a lot of important and helpful educational, informative information here about the financial trading markets. In addition to this, we also have multiple webinars which are available. Each webinar is based on a different aspect of the markets that you can, of course, take into consideration. Now, if you also log in, there's even more educational material available to you. For example, like our most recent ebook, which is mainly based on fundamental analysis. So, ladies and gentlemen, do we have any questions? If not, I will end today's session. I cannot see any questions, so let's end the session. So, ladies and gentlemen, enjoy the rest of your day. Enjoy your weekend. Good luck. Trade responsibly and safely, like we always try and promote. In the meantime, though, enjoy the rest of your day, and hopefully we'll see you next week on one of our live sessions or webinars. I've got a question here. How do we trade those gaps? The question here is. Now, what I actually will point you to is very recently we had a past webinar, which is based on trading price gaps. So rather than me giving you a rash answer to that question, if you go to our website and you go here to tools and educations, and you go to webinars and you go down to Mr. Webinar, watch it here, you will be able to see that there is a webinar which is based on price gaps. So you can see here how to trade market gaps strategy. This will be a very interesting webinar for you if you're looking to take advantage of gaps or use them as indications as part of your trading. Okay, ladies and gentlemen, have a lovely afternoon, and hopefully you found today